What's up, everyone? Welcome back to BWC Finance. If you've been shopping online lately, you've definitely seen those tempting buttons at checkout that say, pay in 4 installments, or split your purchase. Maybe you've already clicked on one to grab those sneakers you couldn't quite afford up front, or to spread out the cost of a new laptop. You're definitely not alone in this. Today, we're diving deep into the buy now, pay later revolution that's transforming how Americans spend money. I'm going to break down everything you need to know about BNPL services, from how they work to the hidden costs that nobody talks about, and most importantly, how to use them without wrecking your financial future. Companies like Klarna, Afterpay, Affirm, and Sezzle have turned what used to be a niche payment option into a mainstream financial tool that millions of people use every single day. The concept seems simple enough. Instead of paying the full price up front or paying with a credit card, BNPL services split your total into smaller chunks that feel more manageable. Most of the time, you'll see the pay in 4 model, where you pay 25% at checkout and then make 3 more payments every 2 weeks. Some services offer longer payment plans with monthly installments, especially for bigger purchases like furniture or electronics. For young adults who are juggling student loans, entry-level salaries, and all the financial pressures of trying to adult in today's economy, BNPL services feel like a lifeline. They give you access to purchases that would normally require saving for weeks or months. There's usually no credit check for the short-term plans, no interest charges if you pay on time, and you get approved in literally seconds. But here's where it gets interesting from a psychology perspective. BNPL services tap into our brain's desire for instant gratification. While making expensive purchases feel more affordable, that $200 jacket suddenly becomes 4 payments of $50, which somehow feels way less scary to our wallets. This mental accounting trick makes it easy to justify purchases we might otherwise skip completely. The numbers behind this growth are absolutely wild. The BNPL industry processed over $100 billion in transactions in 2023, and that's up from just $20 billion in 2019. Young adults are driving most of this growth, with 73% of Gen Z and 67% of millennials having used BNPL services, according to recent surveys. While BNPL services love to position themselves as interest-free alternatives to credit cards, the truth is way more complicated than that. Late fees can be brutal, often ranging anywhere from $7 to $40 per missed payment. Some services tack on extra fees for processing payments or rescheduling due dates. When you add up all these potential costs, that free financing can get expensive really fast. What's even more concerning is how BNPL services mess with your spending behavior. Research shows that people using these services tend to spend 10 to 40% more than they would with traditional payment methods. The ease of approval and the psychological effect of those smaller payment amounts can lead to impulse purchases and serious financial overextension. While most BNPL services don't require credit checks for approval, many report late payments to credit bureaus. This means missed payments can tank your credit score, but making on-time payments typically won't help build your credit score. You're getting all the downside risk without any of the upside benefits. Here's something that might surprise you about the regulatory landscape. Unlike credit cards, BNPL services operate in a gray area when it comes to regulations. They're not subject to the same consumer protections as traditional credit products, which means fewer safeguards around disclosure of terms, dispute resolution, and debt collection practices. The Consumer Financial Protection Bureau has started looking at this industry more closely, especially around data collection practices and lending standards. But right now, consumers have way fewer protections when things go wrong with BNPL purchases compared to credit card transactions. If you're going to use BNPL services, and honestly, many of you probably will, you need to treat them with the same respect you'd give any other form of debt. Create a clear budget that accounts for all your upcoming payments across different services. It's easy to lose track when you have multiple payment plans running at the same time with different companies. Set up automatic payments to avoid those late fees, but monitor your bank account carefully to make sure you actually have the money there. Overdraft fees from your bank can quickly wipe out any savings you thought you were getting in the first place. Think about the total cost of ownership, not just that monthly payment. That $800 phone might seem manageable at $200 per month, but you're still committing $800 of your future income. Ask yourself honestly if you'd make the same purchase if you had to pay cash today. Many financial experts state that responsible credit card use offers better value than BNPL services. Credit cards provide purchase protection, fraud liability limits, and the opportunity to actually build your credit history. Many cards offer cashback or rewards that can offset their costs. However, credit cards require discipline that honestly not everyone has. The minimum payment structure can lead to long-term debt cycles that are hard to break, and interest rates can be expensive. For people who struggle with credit card debt, BNPL services might actually offer more structure and forced payoff timelines. The key difference is flexibility. Credit cards give you revolving credit that you can use over and over again, while BNPL services are tied to specific purchases. This can be either a feature or a limitation depending on your financial situation and spending habits. BNPL services can be a stepping stone to better financial management, but they absolutely should not become a permanent crutch. The real goal should be building enough financial stability to make necessary purchases without needing to finance them. Start by using BNPL services only for essential purchases, not wants. That new gaming console might feel important, but it's not essential for your daily life. Things like professional clothing for work, necessary electronics, or home essentials that you actually need are. Track your spending across all BNPL services using a spreadsheet or budgeting app. So many people underestimate how much they've committed to future payments across multiple platforms. This tracking becomes absolutely crucial for maintaining financial awareness and not getting in over your head. The BNPL industry is evolving super rapidly. Some services are expanding into longer-term loans with interest charges, which blurs the lines between BNPL and traditional lending. Others are partnering with banks to offer more traditional credit products. More regulation is definitely coming. The CFPB has indicated it's going to start treating BNPL services more like traditional credit products, which could mean more consumer protections but also stricter lending standards. As this industry matures, we'll probably see more standardization in terms, better integration with credit reporting, and clearer fee structures. This evolution could actually benefit consumers through increased transparency and protection. BNPL services aren't inherently good or bad. They're financial tools that can be helpful or harmful depending on exactly how you use them. The key is being brutally honest with yourself about your spending habits and financial discipline. If you find yourself using BNPL services to afford basic necessities like groceries or rent, that's a red flag that it might be time to reassess your budget and potentially look for additional income sources. These services work best when used strategically for planned purchases, not as a way to stretch an already tight budget. Think about your financial goals when deciding whether to use BNPL services. If you're working toward building an emergency fund or paying off high-interest debt, adding new payment obligations might not align with those priorities at all. Bottom line, buy now, pay later services have democratized access to financing for millions of young Americans. They've made it easier to afford necessary purchases and spread costs over time. But like any financial tool, they require thoughtful use and a clear understanding of all the implications. As you navigate your financial journey, remember that no payment method or financing option is a substitute for living within your means and building long-term financial stability. That's a wrap on today's deep dive into Buy Now, Pay Later services. If this video helped you understand BNPL better, smash that like button and subscribe for more practical financial advice. Drop a comment below to let everyone know what experiences you've had with Buy Now, Pay Later. And I'll see you in the next video.